All right, so let's talk about Dell. This is one of the old PC dinosaur makers who has reinvented themselves. They reported earnings late last week. Stock fell because it was all about the margins decline. Now, before we get into the analysis, let's get into the news. I got a juicy level for you, as that level is going to suggest one can go long. So shares in Dell edged lower after the Texas-based group predicted that it would post a drop in adjusted gross margins in its fiscal 2026 year, weighed down by the increasing costs associated with building out its AI servers, as well as tepid demand for its PCs. Dell said its full-year adjusted gross margin rate would fall by about 100 basis points. Speaking to analysts, Chief Operating Officer Jeff Clark also flagged that Dell is gauging the possible effect of U.S. President Donald Trump's tariffs plan on input costs. Still, Dell forecasts a 53% year-over-year jump in annual AI server shipments to 15 billion. The products, which feature Nvidia chips and compete with servers from rival Supermicro, can handle the massive amounts of computational demand needed to power and train AI models. For the fourth quarter, Dell reported adjusted earnings of $2.68 on revenue of $24 billion, compared to estimates of $2.53 and on $24.5 billion. So they beat Wall Street estimates. For the full year 2026, EPS was expected to be $9.30 on revenue between 101 to 105 billion versus expectations of $9.29 and 103.6 billion. Dell also increased its annual cash dividend by 18% to $2.10 per share, and also announced a $10 billion jump in its stock buyback program. But again, it was all about the margins, and the margins have to deal with input costs. Now, price did hit a high back in May of 2024, near that $180 level. And since then, price has been respecting this downtrend line. And you have a steeper one that developed as well. Now, I want to bring your attention to this drop in price, basing candle, and then a rally higher. Because price could not take out these sell or rejection wicks, the chart suggested that the sellers were still in control. Now, this is called a level on level. You have weekly buyers at 90, weekly buyers at $80. And this is the setup. When you have a level at the bottom of price, typically for your highest reward to risk ratio, you take your entry in between the two levels, you put your stop below the lower level. And so the charts are suggesting look for further declines. However, one can go long down near this $85 level. Thanks for watching. Subscribe. Please like the video.